Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, something is being priced into these markets that we have never seen before ever in the history of the markets. And it's so severe, it's going to blow your mind. We're going to cover what that is in this video. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Bob, credit default swaps. Haven't really heard much about that since, well, the great financial crisis, movies like The Big Short and stuff like that. But man, is it here with a vengeance.
Yeah, and the thing is, and I think that's probably why, we're like frustrated that the sell-off isn't even more pronounced than it is, because this absolutely tells the tale. I'm going to show you guys a chart in a minute. The CDSs have blown out, Phil, and the market usually follows along with that. And, I guess my view is that, it's probably the Treasury still working against this disaster, but, we can't avoid it. Let me throw the chart so people can see what I'm talking about, so I'm just not pulling numbers out of the air. If you look at the historical average of credit default swap, it was up 527% over, these are the different market sell-offs, okay? And look at the commodities. Now, market follows the commodities, so just take a look at oil, is something people need, okay? So you have an average fall of 32% on oil with credit default swaps on a normal historical level, okay? And you have commodities that on average go down 21%. But this time, we're 821% increase in the credit default swaps, Phil, okay? But oil's only down 18% or 16% there, bit of an eye chart for me, and minus 11% on the commodities. Now, that tells me one of two things. One is that the market's going to collapse, but commodities hold up because of the stagflationary nature of what's happening here, or we have not yet begun to fight, and we have a collapse coming.
Well, if you look at this next chart, Bob, which takes what you described, that chart that you shared there's intriguing because of the correlation in the decline in the commodities on a historical average of 520%. We're at 975% rise, which you can see here in this chart. This is the historical chart of the U.S. credit default swap. So you can buy, effectively, you can short the U.S. government. You buy these swaps, and if the government defaults, you make a killing. That's how Michael Burry got so rich off of the great financial crisis, because he took out credit default swaps. And correct me if I'm wrong, Bob, but I think he helped engineered credit default swaps because he went to Goldman Sachs and said, how can I short the mortgage industry? And they came up with a credit default swap. Anyway, Since then, CDSs have been entrenched in the financial system, but these contracts allow you to take out insurance policies against the default in the US. Look how much they've risen. I mean, it's skyrocketing. People in the know trade credit default swaps, and they are concerned, very, very concerned that this debt ceiling fight is not going to result in your typical resolution where in the 11th or 12th hour, they say, okay, we're going to raise it, because Republicans want some concessions. They want to see some spending get reined in. And I agree with them on that regard. Like this pork belly stuff's got to stop. And so we finally have, I think, a cast of characters. We've said this before. My belief is that you might, for the first time ever, see where we get past the X date. And since the days of Clinton, where you're going to have to shut down some of the parks and museums and other non-essential things in the government just to pay. It doesn't mean we're going to default at that time. Just means that we're going to start winding parts of the government down in order to pay the debt off, the debt payments. So that being said, I thought this chart was scary because look at the great financial crisis, 08, 09. That's when the world was burning. I literally thought the ATM machines were going to stop working then. And look where we are. I mean, if that doesn't tell you how perilous things are right now and what a gift that this market is even trading anywhere in the 4100s. I mean, what a gift right now. We should be down in the dumpster fires, and we're not, Bob. So you've said it before. It's a gift that we are able to even get short this market at these levels.
Yeah, look, you have no excuse. When we come rolling out in 12 months from now and say we told you so, I hope a lot of you guys are sitting back saying, I'm glad I took action, because you guys don't see this. Retail doesn't see these charts, okay? You guys, Janet Yellen is telling you could drive your truck on the lake because the ice is 2 feet thick, when reality ice is 2 inches thick.
Yeah.
And you just never know where you're going to go through. And when the CDSs are blowing out like this, it could be an absolute disaster. I mean, look at 2011 spike. Okay, 2011 happened in one day.
Yep.
All right. So that's why you got to be really careful. You got to have hedges on. You got to not be complacent, and you got to be trimming as you go here. And we're starting to see the shakedown. We got oil now hit 65. You're starting to see some of the large caps, which I own some, start to suffer a little bit. And everything now is being held up by the twin pillars of Microsoft and Apple, Phil.
I know. What is that? 14% of the entire market now? I mean, we always joke about it comes down to like a couple stocks. It's literally down to like a couple stocks to holding up the whole market.
Yeah, which is absolutely mind-boggling. And when they go, there's nothing you can protect you because they make up the index. Think about that, guys. 2 stocks, scare E.
That's huge.
Yeah, it's amazing. So anyway, I think you have a chart you want to kind of show where things are. Look, we're just showing you guys this stuff because the market is still not yet catching down to where it needs to go to kind of clear market at value. So look what happened these last 2 days. Whoosh, whoosh. It can happen fast once the dam breaks on this stuff.
Yeah. So you were talking about it can be frustrating sometimes because the market's just over its skis. But again, this is the Fed liquidity template. We're very close to releasing it. You guys can have this for your own trading purposes. It's my swing trading chart. When we talk about getting those 100-point plus moves, and we're basing it off of this stuff, really pays the bills. But here we are. We're at this level here where we've got the red circle. We're in overbought land. Why? Because liquidity is dropping a whole bunch down here, and we're over our skis. And you guys can clearly see on the chart, whenever price, the candles, the S&P 500 is basically creating like these jaws away from liquidity, the S&P 500 just snaps back down. Because unless liquidity comes roaring back in, like we had back here, this market just can't sustain these levels without the support of this. So it can do it for a little while. We saw it a couple of times here in this market, but the snap back down is pretty violent. Also, too, the tops take some time. We were talking about this in the room today. Yes, you can have a top like this where it's like 1, 2, 3 candle top, boom, back down. But a lot of times it'll take several days. Here was where the market was getting overvalued. Chop, 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 actually squirted one last time. That can happen here too, but squirted one last time. But the point is that when you're in these upper rotations, this is borrowed time country here. And, you can see it's trying to hold on to the support level, but it's having a hard time. And who knows, maybe Apple's earnings today does the trick and this thing cuts loose, or maybe it decides to push up one last time into tomorrow and cut loose next week. We don't know. But what we do know is you generally get short in these areas, it pays over time. And that's, and I think that's the hardest part, Bob, for people. And when you don't have these references that you can look to and say, okay, yeah, this is starting to top out, might take a couple more days, but here we are. You can lose sight of it in the day-to-day trading.
Yeah, and look, in the rule of thumb that we did, look, we were going short here. So the last 2 days have been tremendous for us. So now we're a little cautious because usually a red week going into Thursday, a lot of times the shorts will pull out for Friday. So, today's the day you take some profit and you're light into Friday, even though the market may still fall further. That's just good trade management. But to your point, Phil, is that we know when we get a sell signal, intuitively, you start scaling in over 5 days and you give yourself 2 to 3 weeks if you're trading options.
Right.
If you're trading futures, you sell a little bit every day to get your average in, and then you just wait for the market to catch down. It invariably does. Okay. Now bottoms are different, Phil. Bottoms V, tops usually U unless there's an event.
Yep.
And so usually when you get a buy signal, you can be a little bit more aggressive.
Yep.
Because the market naturally wants to elevate, and it's a great way to use the tool. We're gonna get this thing out to you guys. You want to buy it? What you're gonna pay for it? You'll probably pay for itself in 1 or 2 trades. It's an awesome tool, and we live by it because you need signposts, and you can't listen to the news because they're gonna goofy foot you every time.
100% agree.
hit like, hit subscribe, come check us out and check out the room. And we've had an awesome day. People made more money today than it costs for a year for the service. So we definitely value price our services so that you get a good ROI working with us. So with that, you guys have a great day and we'll catch you tomorrow.
Thanks, guys. See you later.
Trade Genius.